Welcome. Today we're diving into a fascinating technique used by traders, squaring the price range in a prior trend with time in the current trend. This method, rooted in the legendary square of 9, helps traders identify key turning points in the market by connecting price movements from the past with time cycles in the present. Whether you're a seasoned investor or just starting out, understanding this approach can give you a new perspective on market analysis. Let's break down the concepts, walk through real examples, and see how you can apply this to your own trading strategy. Use this technique, you'll need two key pieces of information: the price range of the prior trend and the number of trading days, TDs, or calendar days, CDs, that have elapsed in the current trend. These data points allow you to compare past price action with present time cycles, helping you spot moments when price and time align. This alignment, or squaring, often signals a potential change in market direction. Gathering accurate data is the first step to making this method work for you. Let's look at a real-world example using the S&P 500 Index (SPX) from the fall of 2002. During this period, the SPX experienced several notable swings, making it ideal for demonstrating the squaring technique. We'll focus on the downswing from August 22 to October 10, which set the stage for our analysis. By examining the price range and the subsequent time elapsed, we can see how the square of 9 method highlights significant market turning points. Our SPX example, the price dropped from a high to a low over a range of 196.37 points. For simplicity, we round this to 196 points. This number is crucial because it will be converted into degrees using the square of 9 conversion table. The conversion process translates price movement into a geometric angle, setting the foundation for comparing it with time cycles. This step is essential for aligning price and time in your analysis. The price range set at 196, we consult the square of 9 conversion table. According to the table, 196 points correspond to 135 degrees. This angle becomes our reference for the next step. The conversion table is a powerful tool, allowing traders to translate raw price data into a format that can be compared directly with time cycles. This geometric approach is what sets the square of 9 apart from other trading tools. Next, we look at the time elapsed in the current trend. From the October 10 low to the high of the next swing, 36 trading days passed. Checking the conversion table again, we see that 36 also equals 135 degrees. This means both the price range and the time cycle align at the same angle, 135 degrees. When price and time square like this, it often marks a pivotal moment in the market, signaling a potential reversal or significant move. This SPX case, the alignment of price and time at 135 degrees coincided with the start of a 146-point downswing. This demonstrates the power of the square of 9 technique. When both price and time reach the same geometric angle, the market often reacts strongly. Recognizing these moments can help traders anticipate major moves and adjust their strategies accordingly. Let's shift to another example, this time with Dell stock. In September 2002, Dell made a swing low, followed by a swing high in November 2002. The closing price range for this move was 6.64 points. This example will show how the square of 9 can be applied to stocks trading at different price levels and how the method adapts to various market instruments. Since Dell trades at 2 digits, we convert the price range of 6.64 points to 66.4 for the square of 9 calculation. This adjustment ensures consistency when applying the formula, regardless of whether you're analyzing a high-priced index or a lower-priced stock. Proper conversion is key to accurate analysis and meaningful results. Plugging 66.4 into the original square of 9 formula gives us an angle of 161.75 degrees. This angle represents the geometric position of the price range on the square of 9. By identifying this angle, we can now look for time cycles, specific numbers of trading or calendar days, that also fall on this angle, potentially signaling when a trend might change. Find all numbers that fall on a particular angle. We use a second formula, 2*n plus 2*x/360 plus 125 2. Here, n is the number of the rotation and x is the angle of interest. Start with n equals 1 and repeat for higher values of n to find multiple possibilities. This formula helps identify the time cycles that align with your chosen price angle, expanding your analysis beyond just one potential turning point. Let's run through the calculations using the angle of 161.75 degrees. For n equals 1, the result is about 17. For n equals 2, it's 37, and for n equals 3, it's 66. These numbers represent possible trading or calendar day counts where a trend change might occur. By checking these points on the chart, traders can look for signs of a reversal or continuation in the trend. After running the calculations, we check if any of these time cycles matched a significant event in Dell's price action. In this case, none of the calculated TD/CD counts aligned with the actual reversal on February 10. This highlights an important lesson. Sometimes the initial calculation isn't enough and further analysis is needed to capture the true turning point. Financial markets, price and time can also square at 390-degree offsets from the primary angle. For our Dell example, these offsets are 251.75, 341.75 and 71.75 degrees. By applying the formula to these angles, we expand our search for potential turning points, increasing the chances of identifying when a trend might change. When we run the formula for the 71.75-degree offset, the third iteration gives us 58 TDs. This matches the actual reversal in Dell's price, showing how considering offset angles can reveal hidden turning points. This step demonstrates the depth and flexibility of the square of 9 method, encouraging traders to look beyond the obvious and dig deeper into their analysis. This example drives home a crucial point. The relationship between price and time that stops a move or changes a trend isn't always obvious. There's no substitute for doing the calculations and exploring all possible angles. The square of 9 method rewards thoroughness and persistence, making it a valuable tool for traders willing to put in the effort. By using the second formula to calculate not just the primary angle but also its 90-degree offsets, you're essentially squaring the circle. This phrase refers to the process of finding all possible alignments between price and time, ensuring you don't miss critical market signals. It's a comprehensive approach that can be applied to any market and any time frame. To summarize, there are two key formulas in the square of 9 method. The first converts numbers like price ranges to degrees, and the second converts degrees to all the numbers that lie on that angle. Mastering these formulas allows you to apply the square of 9 to any market, helping you anticipate trend changes with greater confidence. There's no shortcut to mastering this technique. The spatial relationship between price and time is subtle and often hidden. Only by working through the calculations and considering all angles can you uncover the moments when the market is likely to turn. This discipline is what separates successful traders from the rest. Beauty of the square of 9 method is its versatility. Whether you're trading stocks, indices, or other financial instruments, these formulas and techniques can be adapted to fit your needs. By consistently applying the method, you'll develop a deeper understanding of market cycles and improve your ability to anticipate key turning points. Summary: squaring the price range in a prior trend with time in the current trend is a powerful way to spot potential market reversals. By mastering the square of 9's two essential formulas and diligently applying them, including all relevant offsets, you can uncover hidden relationships between price and time. This method requires effort and attention to detail, but the rewards can be significant for those who persist. Keep practicing and you'll soon see the benefits in your trading result.